It's Accountech Bytes, your diminutive digest of the latest news from the world of accounting technology with me, Tom Herbert. Thanks for tuning in, and as always, if you'd be kind enough to like, subscribe, or follow, I'd be eternally grateful. Let's get into the news. Now, I don't normally cover policy papers as headline news, but this from ChatGPT parent OpenAI certainly piqued my interest. So, Industrial Policy for the Intelligence Age contains 13 pages, mostly of seemingly AI generated waffle, the usual clumsy analogies with AI and electricity, etc., mixed in with some disingenuous aims that are straight out of Orwell's Ministry of Truth. But it is the building an open economy section that I think is of most interest to us. So it says here, as AI reshapes work and production, let's run that through the AI nonsense translator. As more people are laid off thanks to AI, the composition of economic activity may shift. Obviously, a large proportion of many governments' income is through taxation on labour and payroll. OpenAI posits that this will erode the tax base and therefore core programs like social security, healthcare, etc. So the paper suggests that policymakers could rebalance the tax base by increasing reliance on capital-based revenues, so higher taxes on capital gains at the top, corporate income, or targeted measures on sustained AI-driven returns. Robot taxes? For fans of John Maynard Keynes, there's also a mention for the 4-day work week and a demand to avoid creating unnecessary compliance burdens when auditing models like this. My thought about this is that it's a shame that this modern breed of tech billionaire isn't content with building a decent product and being happy with the benefits that it brings humanity. Instead, they need to bend society to their own will. I'm not doubting for a second that AI will bring efficiencies, but it's far too early on in the cycle to know exactly what form they will take. And the CEO of Puzzle, Sasha Orlov, posts that Claude parent company Anthropic is hiring 18 accountants because they can't automate their accounting with Claude. They're the largest NetSuite customer. We'll come back to that in a second, but they still close the books manually. As their CFO said at a recent conference, even at Anthropic, closing the books isn't automated, it isn't autonomous. You need a human to make a judgment call every month. So as it says here, whenever you're pitched a product that claims autonomous accounting or self-driving books, just remember that the people who invented Claude can't automate their own accounting. As it says, it's fear-based marketing designed to make accountants feel replaceable so they'll panic and buy software. AI is making good accountants faster. Amen. Now, I mentioned last week I went to NetSuite's London conference. Well, here's the full write-up I promised. NetSuite founder Evan Goldberg is positioning the product around artificial intelligence, but framing this shift as a practical finance transformation rather than another blast of AI hype. So live in the product now, its closed manager command center is designed to make the month-end close a more automated process. Perhaps the folks at Anthropic could do with that. While its new exception manager and bank transaction matching features part of its wider vision of that autonomous close that's in the pipeline. Meanwhile, the folks at Big Four firm EY have become the latest to pipe agentic AI into the audit experience. So according to this press release, EY Canvas is a global assurance platform that processes more than 1.4 trillion lines of journal entry data per year in order to power the firm's 160,000 audit engagements around the world. It's another one of these long press releases that doesn't really explain what it's actually doing. The FT's Stephen Foley tackles it to some extent. He says that the new Canvas audit platform is designed to speed up the corporate risk assessment used to plan an audit, ping staff as they work with relevant audit guidance, and pre-fill work papers that document their progress. But as the title of the piece suggests, while AI may be arriving in auditing, are the regulators ready? Well, Mark Babington at our very own FRC told the paper that you can't blame it on the books. If you use this technology, you are still accountable for it. So it's a human's name above the door. As most audit regulations were written when it was assumed auditors would be randomly sampling client transactions, what does that mean when firms now routinely screen all the data and focus on whatever looks anomalous? Interesting reaction to this from Redditors. One person says, audit or any form of assurance depends on an auditor signing their name and saying, we looked at things and here's a summary of how it all looks. It seems to me that if AI does the audit, then we don't have the one thing that makes an audit an audit. Some big questions there, and we'll hopefully be tackling some of them in a webinar on Thursday, April the 23rd, where myself and a panel of tech titans will be discussing balancing practical AI with professional judgment in audit. To watch the webinar, just visit the link in the description and sign up there. Now, a new study from accounting software platform Iris suggests that accounting firm bosses are at risk of overlooking the role of tech in attracting and retaining young talent, as early career accountants reveal they're losing 33 days worth of productive time a year dealing with outdated systems. So this is a study of 500 final year accounting students, recent graduates, and early career accounting professionals. Nearly half of them expect modern cloud-based systems, with 34% expecting seamless integrated technology across all workflows. Do let me know if you find any firm where that happens. Anyway, these accountants revealed that disconnected systems are leading to 5 hours being wasted each week, equivalent to 33 days of time being lost a year. All this, according to the study, highlights technology's role in underpinning the day-to-day experience that supports staff retention. So, like many of you, I was glued to the journey of the Artemis 2 rocket, but it was reassuring to know that even these high-powered astronauts have problems with their email. Apparently, speaking with Mission Control in Houston, Mission Commander Reed Wiseman said that he had 2 Microsoft Outlooks and neither one of them was working. As the strapline in Wired says, they tried turning the computer off and on again. Love this from CPA Nancy McClelland, who came across this zinger on language learning app Duolingo. And here's your weekly reminder that if you're an accountant in practice or industry, then you can enter the Accounting Excellence Awards 2026. Our categories include Firm Awards, Service Line Awards, and Individual Awards as well. Entries close in May. More information, accountingexcellence.co.uk. Let's head over to MCD Corner now, where Making Tax Digital for Income Tax has arrived. Yes, the 6th of April not only brought in a new tax year here in the UK, but it also marked the beginning of the end of the MTD journey, which started 11 years ago. The first quarterly filing for mandated clients is due on the 7th of August, with the first final return due at the end of January 2028. According to Making Tax Digital Director Craig Ogilvie, Making Tax Digital sign-ups are now close to 230,000. Out of those, 840,000 in scope, so 69% of those already signed up have been signed up by an agent. And hot off the press from the ATT, HMRC has confirmed that all SA 109 taxpayers are exempt from Making Tax Digital until 2027. So if you included those SA 109 pages in your 2024-25 tax return, you will be automatically temporarily exempt from MTD. Some new product releases from consolidation tool Join. So you've got more control over which budgets appear in your reports. You can now choose exactly which budget or budgets to use when running your reports, rather than reports automatically picking up whichever budgets are currently active. You can choose when actuals switch to budget. You can connect Claude, ChatGPT, etc. straight to your financial data via an MCP connection. So these MCPs are similar to the APIs that you get with cloud accounting tools that link to third parties. You can use Join AI to ask questions about your data. There's multilingual reporting. And report downloads to Excel now include native formulas in row totals, column totals, and calculated fields. There's lots more updates as well, so do check out the Join site for more information. And finally, here's a podcast to get you through the rest of the week. The latest No Accounting for Tech has landed, where I talk to firm owners Amy Hancock and Aaron Patrick about what's on their software shopping list for this upcoming season. MTD and AI are involved, but there's also a bit of audit tech chat, which was exciting. And that's your lot for today. Thank you so much for watching. As always, if you'd be kind enough to like, follow, or subscribe, that would be wonderful. I'll be back next week with another video. Bye for now.